Today, this afternoon, we're going to talk to you a little bit about managing money laundering risk in small and mid-sized institutions. And as we all know, managing money laundering and terrorist financing risk in any size institution is difficult. But small and mid-sized institutions at times will offer a little bit more of unique challenges in the areas of, as we've talked about the past couple of days, staffing and resources, systems, tools, and technology. And so what we're going to do for about an hour or so this afternoon is this panel will talk to you about some of the challenges that they have had and some of the best practices they have implemented in their organizations to overcome some of those challenges.
So, from a regulator's perspective, we heard some interesting things about risk assessment in the general sessions either today or yesterday. Just a few things I thought I would tell you that common things that I see that maybe you may learn from in terms of you not doing this. Scope of your risk assessment. We've run into risk assessments that do not include all of the products that your bank offers, for example. And so the question that we obviously have is, how come you didn't include 2 of the products that you're currently offering? And we've gotten varied responses to that question, one of which has been, oh, I didn't know we offered this product, so that's not good, right? You don't want an examiner telling you that you're offering a couple of products. And that, of course, leads us down the trail. How involved are you in your new product discussions in any committees or whatever? Obviously not very involved. And, of course, we encourage that you have some insight into new products. And then the second response to that is, we are aware of the product, we just simply haven't updated it. So, that's a better answer and an acceptable one, assuming it can be an acceptable response, assuming it's on in their frame of sight to do going forward. So that's make sure that your risk assessment is inclusive of all of your products and services. And then Joe, I think Joe and Jamie and I just had a discussion before we came in about customer risk assessment methodologies and what banks are using these days. And what we're seeing a lot of is the customer risk scoring models, and those are not good or bad. They can be good, they can be bad, but again, making sure that the data that goes in there is the right data and is accurate data, and also making sure that you understand the methodology that's spitting out the risk score that gets you to an aggregate customer risk understanding of your risk, and then making sure that you can explain that to us. Another thing with your risk assessment, if you're weighting the 3 factors of geography, customer, entity, products, make sure that you have an explanation for why you're weighting them, and we just need that rationale. So I've heard several AML industry folks say that they believe that customer risk is really the driver of AML risk. And I don't know if you agree with that or not, but they rated their customer risk higher, and they were able to explain why they did that. So the other thing with risk assessments, governance, if you are doing the risk assessment methodology where you survey your lines of business and sort of compile those results and vet and calibrate those results, if you disagree with line of business assessments of AML risk, be sure you document and you have an override process that we can understand and see. So those are some examples of things that we've run into the past year or two that are popping up. So I thought that you might benefit from those.
All right, I'll walk through some of the things I do for the risk assessment. We are actually going to an automated tool soon, and I'm extremely happy. Because the spreadsheets drive me insane sometimes. But people know I like spreadsheets, but sometimes I take it a little bit too far. Basically, if everyone's seen the BSA manual, I know everyone will raise their hand, so you don't have to. Basically, what I do is I go to the FFIC site, and I copy all the headers. and I go through each line and I say, does our bank have this? Yes, no. If it does have it, you can see on the sample, funds transferred and foreign funds transferred. Our bank does those. I give it the base score you see is basically the inherent risk of it. What's the inherent risk of these type of transactions? I then go and to say how many customers do these type of transactions. So for funds transfer, 2,900. Foreign funds transfer about 300. I trend it. So I see last year to this year, and when I trend it, I can tell if our risk is increasing, decreasing, staying the same, percent change, and what percent of our customer base actually does this stuff. So what percent of our customer base is actually doing wires, doing foreign wires. Based on that, I'll get the risk score in general, and then I'll put my controls and mitigation factors in place for it. So what am I going to do for foreign funds transfer to mitigate the risk of them? How am I going to take a look at them? How often am I going to take a look at them? And I'll also show the direction of the risk. And I'll do this for the business lines, for money service businesses, for remote deposit capture customers. So I'll have the spreadsheet and plug in the information. For the ones that are customers like MSBs and remote deposit capture, I'll actually put who are the, what's the high and then what's the average. So I want to know who the high players are, who does the most transactions. And then I'll put in what the average is for the whole customer base to kind of see and kind of give me a baseline. And I'll put in and I'll document from there kind of, and that's why I use a spreadsheet. I'll document through the columns how we're going to control and mitigate those actions, how frequently are we going to review them, and what are we going to do, if something comes out of the norm. One of the most important things we've started to do is when we get MSBs, third-party payment processors, how many of y'all are able to mark them in the system as an MSB, or what I call tag them? We can tag them, and what we do when we tag them is we give them a higher risk score. We're not saying all of them are inherently high. We give them, a part of a risk score saying they're a high-risk customer. But we also take into account what transactions they do to kind of make the risk score go up or make it stay the same. How many of you, if you have mobile deposit, how many of you have mobile deposit? If you do have it, is it a different transaction code than a normal deposit? Good. That's another thing when you're thinking and you're getting involved. That's why it's important to be involved in your product and service development, because if you're sitting in a meeting with marketing and all of a sudden they said, we're going to start doing international letters of credit, and you see my face get blood red and my eyes pop out of my head, I get kind of upset because what I'm trying to do and what I'm doing is when I'm learning about the product, I want to know what the risks are, but I also want to get my say in it that I want this coded differently. I want this to have a unique identifier so I can look at these type of transactions easier. I can run scenarios through the AML system on them so I know what they are, engage them, and I can assess the risk of them easier. If you have P2P, person-to-person payments for your ACHs or IETs, if you can't pull those out and be able to tell what they are to do OFAC or to do something else, it makes your job a lot harder. But if you're able to get in on the front end when they first develop those products and say, I want a different train code for mobile deposits, I want a different train code for P2P, and you can get that implemented, it makes it a lot easier when you're trying to do your risk assessment and you're trying to put things through and monitor your customer base.
Hey, Joe, is that a sample risk assessment then for products?
For products?
Uh-huh.
Yes, there's
Okay.
one for products, services, customers, geographic locations. Yes, and I know Sarah knows it, Liz knows it. I'm crazy with some type of things. My spreadsheet for the transactions even goes into how many ITs, foreign wires, and it breaks it down with customer base information because I want to know, and I want to, staffing issues, I want to know where I need my staff to concentrate on. I want to know what scenarios I need to pay really close attention to and where our customers, and if there's a deviation, if there's a difference in the trend, if there's a spike over time, I need to be able to explain what that spike is. We got a new customer, a customer changed their business pattern, and then I can say why they did it and I can document it.